Now, for one of the most important tools to use as a trader is a stop loss. Now, if you're new to trading, like new that you don't know, you don't have any prior knowledge or anything, um, you should have, a sign of relief when hearing, what a stop loss is and what a take profit is, but especially what a stop loss is. So, yes, before I explain what a stop loss is, I know the main goal is to make money in trading, no doubt. Um, but a but an even bigger goal is to protect the capital you already have in your account. Because think about it. If you're not protecting the capital you already have in your account, how are you going to make the money you want to make if your account is blown? If you lose your capital? You simply can't. Okay, it is what it is. So a stop loss is probably the tool that will help you not blow your account. Okay, unless you hit stop loss after stop loss after stop loss after stop loss. Eventually, long term, you might blow your account, just depending on your trading and your experience and your skill and other factors. But yeah, let me go through. So yes, the most important job as a trader is to protect the capital you have. Right? I gave that example now. That's the only way, so if you lose all your money, all your capital that you deposit, your balance, you cannot make those losses back. So yeah, if you blow your account, you cannot make those losses back unless you deposit more money. Now you're risking more of your own capital. The market can move anyway. You need to know that off the bat. The market can move anyway. It doesn't matter who you are, what trader you are, how good you are, what strategy you use, what method you use, whoever was your mentor. It doesn't matter. The market will move whatever the way the market wants to move. So each day is different. Okay, there's numerous of factors that go behind trading. So you won't get 100% win ratio. Maybe like for a week. Okay, you might be lucky for a week. Maybe 4 trades out of 4 trades you profit. But your trading career will never be 100%. The market will go against you one or another time, right? So this is why a stop loss is important. So, like, we cannot control losing, but we can control how much we lose due to a stop loss. Now, a stop loss is an automatic level that you place. So let's give an example. If you're buying, let's say you're buying, so that means you're expecting price to increase. I'll share an example on the chart. Let's say you're buying, you expect price to increase, so your stop loss has to be below because you're not expecting it to go down. If it goes down, you're losing, right? So your stop loss, you put below your entry, okay, at a certain level. Let's say you risk 50 pips. So you put your stop loss 50 pips below your entry level. Let's say you use a 0.10 lot size. So on average, 0.10 is $1 per pip. So let's say you're risking $50. So what will happen is if price doesn't go your way, if it doesn't go up, so it goes down and you're losing, and it hits that specific level, that stop loss level, at minus $50, it'll automatically close that trade and just minus $50 from your account. So it won't go minus 60, minus 80, minus 100 and go down until your account is blown. If you put a stop loss, that is how much you are risking. So it's very vital to have a stop loss. So here's an example. Entry price is 1.15514. So you expect price to increase from that price level. So price should increase from 1.15514. So your stop loss is below that level. Can you see it's below? It's 1.14730. Okay. So now, okay, explain that. Right, and then your profit is on top. As you can see, the candlestick, the current candlestick, came down and it hit your stop loss. So what will happen is the trade will be automatically closed. The trade won't carry on anymore unless you re-enter. But the trade will be fully closed, and whatever amount you've lost, that would be subtracted from your balance. So like I said, if it hits your stop loss and you're risking, $50, it'll minus $50 from your account. So let's say you deposit $1,000 and this trade you place and it hits your stop loss and it was minus $50, you'll have now $950 in your account. It won't go further down. All right. So why use a stop loss? Main purpose, like I said, okay, you need to make sure that your losses don't increase too big because you will blow your account. The more losses that occur, the bigger losses that occur, the more it's going to play on your mental state, your psychology. Number two, the outcome of a trade can only go one of two ways. Win or a loss, okay? The amount you win or lose depends on many factors. But imagine two people with the same strategy, but different stop loss sizes. Person A, 1% stop loss. Now this 1% is 1% of their account balance. So if they have $1,000 in their account, right, their stop loss is $10. I know it sounds small, but that's proper risk management. Person B is a 10% stop loss. Okay, so if they have $1,000, their stop loss is at $100. Compare $10 to $100. Now, let's say both were on a losing streak, and they both traders lost 10 trades out of 10 trades. So first trade lost, second trade lost, up until the 10th trade they lose. Okay. Person B with the 10%, 100%, boom, gone. Their whole account is blown. Because remember, they have $1,000. Each stop loss is 10%, which is $100. And they've lost 10 times. So it's 100, 200, 300, 400, 500, 600, 7, 8, 9, 10. It's $1,000. Their account is blown out of 10 trades. But the person with the 1%, 2%, 3%, 4%, 5%, 6%, 10% out of 10 trades. So they've lost $100 out of 10 trades. Risk management is important. Several methods to insert a stop loss. Okay, I will discuss it on YouTube. But this is what a stop loss is. Now here's a few mistakes people make, when putting stop losses. The first one is putting it too tight, meaning they put it too close to their entry. Now, I know let's risk a little to make a lot, but you need to know the margin. Like, you can't put it too tight, because you need to give price room to breathe. You need to give price room to move. So don't put it so close to your entry point, right? You're gonna get stopped out the majority of the time, and it's not gonna help. Second one is putting it too far. Don't put it 100 pips or 200 pips or down there in Timbuktu. Don't put it too far, because one stop loss, if you put it too far, might be the amount of your whole account that you'll lose. So you need to find the balance of, there's certain areas what you can look at when putting your stop loss. Number 3, sometimes I'm guilty of this myself, using position size like a certain amount of pips as a stop loss. Okay, I generally don't do this. It generally just works out for me. So I'll basically put my stop loss at a certain level because of something that I see on the market, and it will generally work out between 24 to about 50 pips, between that range, which I'm fine with. So yeah, but don't be like, no matter what, 50 pips, that's my stop loss. No. Okay, you need to see certain things on the chart to identify, okay, is my stop loss good? Yeah, will it get hit, or will it just miss, or would it even get there? You have to look at the chart. And then number 4, place stop losses exactly on support and resistance level. This is a big no-no, because remember, support and resistance levels get tested, and if you're going to put your stop loss on the level, obviously it's going to get stopped out. So you need to put it above or below a couple of pips. Give it some room above or below support and resistance levels. So those are 4 mistakes that people generally make when putting a stop loss. Rules to follow when using stop loss. Number 1, do not let emotions be the reason you move it. Don't be like, no, I feel like, okay, it's going to be in drawdown a little bit. Let me just move it a little bit because I think, it's going to go further up now or further down into profits. Let me, just move it a little. No. Do not do that. You leave it where you put it. Number 2, trail your stop loss. So you can use a trailing stop. Most of you probably don't know what it is. There will be a video about it, but to be honest, I don't really use it myself. I do it manually. So basically what a trailing stop loss is, you set, let's say, 10-20 pips. Okay, what this means is when price moves in your favor about 10-20 pips, then your stop loss will move with it. Okay, but what I do basically is once I'm in profits, I'll move stop loss past entry, securing 100% profit. And then if price is going into deeper profits, then I'll just manually move my stop loss closer and closer and closer. Yeah, that's what I do, similar to a trailing stop. And then number 3, never increase your stop loss after placing it. Like I said, if you place it at a certain level, don't increase it. Don't make it bigger, never. The only time you move your stop loss is if you're putting it past your entry into profits. Otherwise, your trading is going to be disastrous if you're going to move your stop loss. All right, so here's an example of a stop loss. So let's say we analyze. Let's say I analyze here, and yeah, okay. Higher, higher, lower. equal high. Equal high. And then so indicates an uptrend. Is it going to, you know, hold? Price breaks down. Ooh, lower low. Lower low. Great, you know. So market structures telling me that it's a sell. Ooh, market pattern double top. Also telling me broke below the neckline. Remember, this is the neckline. And retesting the neckline. I mean, put trend line. Broke trend line, coming back up. Hmm. 50%, it's rejecting the 50%. So let's say we enter a sell. So I'm going to use the short position tool. So let's say we enter on this, and there's a candlestick pattern. So we enter there. Ooh, stop loss. Let's put it above, you know, the previous high. Because, you know, if it comes above there, then it's no more downtrend, so it's invalid anyways. So I'm going to put it just above there. Let's look left. Okay, nothing left. Oh, there we go. Okay, this gap didn't get filled, so let's say we're going to put it by the gap. Our take profit. Okay, where we expect price to reach. Okay, it's a 1 to 2, but that's not the point. So now, okay, just keep in mind this is a daily time frame. I'll never have my stop loss this big. But we are risking 113 pips to make 293. So now we go on our app, MetaTrader 4. We go to Euro USD. We go market execution. Under stop loss, we put there 1.11855. Okay, for take profit, we put 1.07788 and we click sell. Once you do that, the trade has been placed. Okay, no way backing out now. Trade has been placed. You set your stop loss, you set your take profit, the automatic levels. So you can leave your trade now. You can do your work, you can whatever you want, right? So let me show you what price, you know, did. Okay, we're in profits. Let's say we didn't put stop loss past entry, okay, because we're not good with our risk management, and this happens. Price goes into drawdown, hovers by the entry point, and then boom. Can you see this candlestick stopped us out? It hits our stop loss. So what will happen is the trade that was open on Euro USD, let's say we use 0.10 just for simplicity's sake. So it's $1 per pip on average. So let's say $113. So what will happen is this trade, even if let's say we're at work and it hits our stop loss, we come home or we have time to check our phone, where's my trade gone? You go to your history, oh, minus $113, right? Because it hits your stop loss. So when it hits your stop loss, it'll automatically close the trade and just subtract $113 in your account. Okay, so if you had $1,000 in your account, you just minus 113, and then you know you have your balance. So That's basically what a stop loss is there. So even if, price went all the way up after, hitting your stop loss. Oh, no. I lost it. Oh, there we go. Even if it does this, can you see eventually it came down to take profit here at the bottom? But it's too late because it already hit your stop loss. The trade is closed. The market or the broker is not going to feel sorry for you and say, oh, shame, it did go to his or her take profit. Let's give him, some profit. No. Minus 113, bah, gone. Okay. So, yeah, 113. Okay, remember, we're not going to have a stop loss this big. But, I mean, it's better than blowing your account. So, without having a stop loss. Because then, once price carries on going beyond that point, it will just minus and minus and minus. But if you have a stop loss, it will close where, you set your stop loss. That's why it's very important to have one. Let's go on to the next one, take profit.